900 shares of BSE, and she's bought it at the levels of 130. So she's sitting on a significant profit of over
No,
a
it's
lakh
ulta.
rupees.
She's got 130 shares at
Okay.
4,900.
Okay, bought it for, oh, okay, yeah. So she's got 130 shares, bought at 4,900 apiece, yeah, because the stock is trading at 5,935. So she's still sitting on a profit of 1,35,000. And she wants to know as to, what could be the long-term perspective for this particular counter. Samir, a lot of brokerages are positive and have remained positive on this counter. And, in the recent past, they've also upgraded their ratings for this particular counter. What is your view?
So unfortunately, I'm on a very different side of the spectrum when it comes to the BSE stock compared to some of the other broking companies. As positive as they are, I think the stock is massively overvalued. Okay, so let's take a little step back and just discuss. Okay, so there are two parts of their profitability. The first part is obviously the core business, which is the trading volumes, which generates revenue for them. And as that keeps growing, the operating leverage plays out, and that's great for the profitability. But that only contributes to about 60 or 55% of the profits. The balance of the net profits comes from the other income from its investments. Now, you can't value those investment income at 50 times earnings, because for all practical purposes, they're generating 7% return on that because it's all money put into debt. You can't value debt investments at 50 times earning, because then there'll be many companies that will just start making these listings with debt investments and be overvalued. So if I take out the core business and the operating business, the other income part of the business, the stock is trading at 130 times. Now let's look at the other aspect. I believe that yes, they've been able to grow their market share because of the fact that SEBI has restricted the number of options that come for weekly expiry. So, what's happened is NSE's volumes are down, because of which BSE's percentage is looking better. But net, even at the end of the day, now the question comes is, where's the next round of growth? BSE has entered into the F&O segment. They've got a decent share of the volumes. In the cash segment, the volumes are still not seeing much traction. It's still largely all with NSE, the lion's share of the business. They're talking of listing a few other exchanges like in the Gift City, the BSE, IEX and all that, which will probably bring in some volumes. But remember one thing, whenever a bear markets hit and volumes start declining and these high frequency traders start taking a slight backseat, the drop in top line will lead to a corresponding drop in the profitability as well, because like I said, the operating leverage, which works positively, also works negatively. So for every rupee of revenue that grows, because their cost structure is a largely fixed cost structure, the profits grow quite well. But when that happens in reverse, and that we believe will happen in the next year and a half, we will see a correction, a steeper correction in the market than what we are currently seeing. At that time, I think the volumes will take a further hit, and then these valuations will not be justifiable. So I'm not positive on BSE at this point of time. The stock has obviously had a phenomenal run up. If you go back 2 years, it was, I think, 550, which is now at 5,800 or 900. So you're talking of being 11x. From here, making money in the stock is going to be very difficult. If you ask me, I would like to say it's time to book out of the stock.
All right, book all of the profits that you have on BSE is the view coming in from Samir. Moving